What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC did end up closing red for the week, down just under 10%. It was the first time we closed red in, I think, since early May. Personally, I am not concerned myself whatsoever. Naturally, we are still sitting at that $53 to $54 strong level of support. We are also still sitting in that bull pennant. I know some of you guys might be looking a little bit too closely at the charts thinking, no, we broke free from it. Like I said, guys, wait until the next few days play out before we can really get to decide on which way the direction is going to go. But still, that $53, $54 level of support is very strong. Guys, in this video, I want to talk about two things that are very important, and I'm going to explain them in a little bit deeper of a fashion. First thing I want to take a look at is Vortex, and I want to highlight this to you guys that they have increased their short positions. Okay, they have caused to double down on us. Now, a lot of people have reached out to me saying, Jeff, when are they going to be forced to cover their positions? Why are they continue shorting? How can they continue to short? And my simple answer is this. Okay, some people have said, oh, they don't have any other choice but to continue shorting. Well, they do have another choice. There are always more than one choice to be made. But here is the realm of things. One, just like when I bought my first position at AMC at 15.32 and it got down to $5 and change, I added to my position to lower my dollar cost basis. It's the same thing that they're doing. Okay, if their natural short position was at $10 and now they're shorting again at 55, they're increasing that dollar average of where their short position is, making that range to be smaller. However, you're adding more shares, which means eventually when they cover, the buying pressure is going to be so much greater. So when I look at this, that they're continuing to add to their short positions, literally makes me feel so good inside. Okay, because they are still continuing to bet against us. Now, why are they doing this? One is going to be, yes, to be able to make that difference a little bit smaller, but they're also doing this because they feel like they can continue to get under our skin. People are going to get impatient and then they are going to eventually sell, causing the price to drop down, making their losses much less. Okay, eventually they will cover the short positions. Now, that also begs to differ the other question of when they're going to be forced to cover their short positions. The only time they're going to be forced to cover their short positions is eventually when a prime broker gets to say to them, listen, guys, there's too much risk out there. Okay, I'm worried that you don't have enough liquidity to be able to cover the short position as the price continues to rise even higher. Once the price gets up to that $80, $90, $100, $120 level, the prime brokers are eventually going to take another look and say, guys, listen, some of these hedge funds, especially some of the small ones, the risk is exposed is too great. That's when they're going to start saying, let me get some of my shares back. Until then, we continue to play the push and the pull. We're buying to add pressure. They're shorting to add pressure. We're betting on the stock to go up. They're banking on the stock to go down. And we continue to ride in our channel. And that's okay. If this plays out like it has been, where we get a couple legs up and then it consolidates for a long period of time, that's okay. Now, this also begs me, guys, to talk about something totally different. And I've been seeing this all over the internet, and I really want to highlight it. First off, I want to jump over to the rule filings. And before you guys jump down and say, oh, these rule filings, they don't even matter. They don't even matter. Well, I want to point this out, guys. There is another one, okay? That is the 011 that has just been put into submission, and I'm going to highlight it very briefly. It says this right here, okay? Add certain officers who are allowed to determine that there is a market disruption event under the market disruption and force rule, and add a new rule to adjust situations in which it is necessary to disconnect a participant from the DTC system due to an imminent threat of harm. Guys, I know some of you guys are thinking, oh, as soon as these rule filings go into effect, that an immediate change is going to be happening. And if you don't see that immediate change, you're literally thinking that these rule filings are just bullshit. Well, let me break this down to a very simple way. Imagine you guys at work, and I have no idea what you guys do, what industry you're in, but I'm just going to break it down to be very broad for you guys. Imagine you guys are at work, all right, and you have a team of individuals that have assessed that there is a problem. You see a big problem. You haven't really dived into like the nitty gritty details, but you know there is a big problem and you formulate a solution. and you all agree on it, and you go to tackle that problem with that one solution. And as you dive in deeper, you realize to yourself, holy shit, we just uncovered another problem. And you have to regroup again and assess that problem. And now you're dealing with two problems. One big problem, two separate situations. You formulate another solution, you dive back in, and then you realize, oh my God, now we have to do something else to protect us from the adverse effects that are going to be happening from our first solution. And it really becomes to be like peeling like an onion, layer by layer, and you're uncovering and exposing more situations that pose more harm, more threat to not only the economy, okay, the financial system itself, and everybody that is involved. That's exactly what's happening. Just because you guys don't see these immediate effects from these rule changes, although I will tell you, the volume that happened on Thursday and Friday with 002 being in full effect, there might be some coordinate or coincidence and collaboration with that happening. However, a lot of people did say, they're just continuing to do that on the dark pools. And that might be the case. We're never going to know, okay, until, like I said, it continues to go through this process. It is not a insanely fast process, which begs me to talk about the last thing in this video, which is very, very important. I've begun to see a lot of people posting all over the internet talking about Aron and his $25 million share dilution, which, mind you, he said would not be until at least 2022. And a lot of people have been posting, oh, don't do it, don't do it, don't do it. And I'm not going to get into even what I feel about people posting about that, but I'm going to get into this. If people are posting to not do it, that you're going to vote against the rule change, does that mean that you guys are prepared to continue to hold AMC into 2022? Are you preparing yourself to continue to hold this for at least another 6 months, possibly a year? Okay, I know some of you guys have gotten to be impatient because I've seen, comments from people, and I know a lot of you are saying, oh, those aren't apes, those are shills. Let me tell you, there are impatient people. It's very, very easy to see, okay? Especially when you jump on other different forums, it's very easy to see. But when I see a lot of people talking about that, that no to that rule change, that kind of makes me feel like, okay, well, you know what? My opinion aside on what they should do with the ruling, at least they're thinking about their position in AMC in 2022, because this might very well play out to be a situation like that. If you look at Tesla, and I know Tesla was not like Volkswagen, was not even like the GameStop run back in January. But if you look at Tesla, that was continually another heavily, heavily shorted bet against company, and another leg up, and another leg up, and another leg up. And if you look at where Tesla's at right now, pre-split, it'd be trading at like $3,600 a share. Okay, so it's a massive, massive upside. I know it might not be to your $500,000 a share that you want it to hit in, 7 days, okay, but still massive upside. All right, so go into this. I want you to take out of this video, guys, to think about that situation. Are you prepared to continue to hold? I know some of you guys, like myself, are going to continue to hold because inevitably I have time on my side. I'm not losing out on any of this. I'm still able to live with my life. I'm still able to grow my business. I'm still able to invest in some other stocks. I'm still able to learn and research, okay, more about the stock market and more about how to make my money work for me. But I really wanted to bring that to your attention, guys, because that is going to be a better outlook, is that you stop looking at this on a second to second and minute basis and look at it from the bigger picture, because inevitably, guys, they are going to cover their positions, okay, whether it is an insanely negative loss for them, okay, or it is a marginally loss for them, okay, they are going to cover their positions, which inevitably will lead to a massive amount of buying power, which ultimately leads for the price to go up. So guys, that's it for this video. Have a good weekend. I'll see you in the next one.